Morning. Thank you, Matt, for that kind introduction, and thank you for inviting me to speak here today. I'm particularly honored to be here because I'm one of the 3 newest board members at the PCAOB. As he mentioned, we were questioning if we were even going to exist last year at this time. You may think of the PCAOB as an organization with relevance solely to your auditors. I hope my remarks today will persuade you that the PCAOB is relevant to everybody in the room, whether you're a compliance officer, another executive, and whether your specialty is in accounting or law or finance or ethics. As compliance officers, you're dealing with many of the same issues that are confronting accountants and in turn auditors and in turn the PCAOB. So I want to talk to you about some of the challenges that we have in common and how we're addressing some of those challenges. I also want to talk about some of the specific PCAOB actions that may affect your work as compliance officers. So first, a couple comments on some common challenges related to both technology and the financial crisis. The technology that brought us BlackBerries and iPhones is generally thought of as a good thing unless you're the lead-off speaker at a conference and notice that most of your audience is staring at their lap, checking their morning email. Technology has also brought us the ability to create things we're still trying to wrap our heads around. So I started my studies to become an accountant and an auditor over 35 years ago. And the accounting and auditing objectives are really pretty straightforward. But advances in the technology and business models have made it very difficult for accountants, auditors, and investors, and perhaps even you, to understand the transactions, much less the accounting that you're looking at, to find a comfort level with it. In finance, the effects of technology are just dizzying. But the reality is that as technology has advanced, creative minds have taken advantage of new ways to analyze things and have brought us some creative but complex financial products that help people and companies realize a better return on their investments. Sometimes they even are purported to reduce risk. And if testing the values of these complex financial instruments is hard for auditors, we know it's really hard for the investors to understand what was done or what the values are, what they mean. It means investors are relying more than ever on management of your companies to get the accounting right and on the subsequent assurance that auditors provide and how management did their job. One of the challenges that the PCAOB shares with you is trying to ensure that financial reporting and auditing is appropriately adapted to the changing world in which we all operate. Financial crisis has provided some challenges in that regard. In its wake, investors aren't sure who they can rely on, and they're mad. Investors, we're hearing from them a little bit, they've lost a whole lot of money during the financial crisis, and they're blaming a lot of people. They're blaming management, they're blaming the auditors, they're blaming us, and as I said before, they're mad as hell. A consistent theme has emerged. Investors believe they're not getting adequate information to make their investment decisions. There are many parties with roles in the financial reporting process. Management is on the ground. The audit committees have responsibility to oversee management, hire the auditors, and satisfy themselves that both are doing their jobs. Counsel is actively involved in writing the annual report. The auditor reports on the overall fairness of the financial statements. Analysts interpret the financial information and make predictions about the future. Who among all these parties should be responsible for providing investors with the information they are not getting today? What we've heard from the investors is that they're asking more from the auditors and to some degree management. In essence, investors want auditors to provide an executive summary of that annual report or your book report, and with further discussion around the question, how good are the numbers? Our board is preparing a concept release to seek public comment on possible changes to the auditor's reporting model with the intention of increasing its transparency and relevance while not compromising audit quality. Tall orders. Some have suggested that in addition to improving the audit report, companies themselves ought to provide more information or different information. So some more about the PCAOB responses to what we see. A few comments on the day-to-day activities. Your company's audit may never come under our watch to be inspected, but there are lessons for your company and its management in our inspection process. The PCAOB periodically issues other reports, and one in particular I'm going to mention is we call it the 4010 report. It's a report on the overall inspection findings of all the firms and kind of broken down by category of larger issuers, smaller issuers, and it provides valuable lessons about things that we've seen and how your audit might be affected in the future. One of the things that we have found is there's a direct correlation between how good of a job all of you at companies do with how good of a job the auditors do. In an ideal situation, management does a good job, the auditors do a good job, the investors are happy. By contrast, it's very difficult for an auditor to do a good job what they're auditing is inaccurate, incomplete, or just a mess. One of the things that we're seeing through our inspections is there are a lot of auditors trying to do the right thing, but they're just not coming up with as thorough of a testing as we want. And what's also becoming apparent is that sometimes what the auditors are asked to do is more than what management actually is doing to support the numbers. It's possible that your auditor hasn't done enough work in terms of the testing that they did. One of the things we tell the auditors, if they haven't done enough work, they don't know for sure those numbers are good, and they might need to do some more work. So the better job management does in reporting and supporting the numbers and documenting the numbers, the better job the auditor can do, the more faith an investor can have in what you've done. So the PCAOB's criticisms of the audit firm's quality controls are maintained in a non-public status for a year to give the firms a chance to remediate or correct the deficiencies. The overall tenor of Sarbanes-Oxley was give the firms a chance to fix it before it gets public. So one of the things we have seen, though, is that some of the firms aren't doing a very good job of remediating both those specific defects as well as the quality control defects. And we're trying to make sure that we're doing our job to crisply communicate our expectations to the firms. We're making progress, but have a ways to go. So all this the fact that it's non-public shouldn't inhibit you or your audit committee from asking your auditor, were we inspected? And what were the results? But one of the things that you might be concerned about is whether your next audit might need a different audit approach or different testing, which is going to mean more dollars for you in many cases. At the PCAOB, transparency is at the heart of some of the standards and other projects we're working on in the near term. Some of those may have implications for you. As I mentioned earlier, we're getting a lot of feedback about what the audit communication should be to investors, but we're also in the throes of finalizing a project about communication with the audit committee, which will expand some of the things that the audit committee should be asking the auditor about, as well as some clarifications. Another thing that is coming up frequently is whether or not investors and audit committee members know about all the audit firms that any one of the larger firms uses. So many of you might use a Big 4, Big 6, Big 10 audit firm, and if you have international operations, those firms use their affiliates around the world. Well, each of those affiliates is separately registered with us if they provide assistance on public company audits. And so that's something that we're looking at further disclosure about that, because, as I'll mention in a minute, we don't get a chance to inspect some of those firms. Another area that we're asking for increased transparency on is our enforcement activities against auditors. So in really egregious situations, we take action against the auditors, sometimes to bar the individual auditor, sometimes to sanction the auditor, sometimes sanction the firms. And unfortunately for us, we view that process is not public, like in a court of law or in an SEC action. It doesn't get revealed to the public until years later. And that's something that Congress put into the Act originally, the Sarbanes-Oxley Act, and we're asking them to look at it because we think the benefits of that transparency outweigh the detriments to the firms that might come from it. In closing, I want to mention a few other things that's changing at the PCAOB. Our new chairman has a bias towards action. So as Matt mentioned, there's a lot of things coming out and in the works that you'll be seeing soon. Every one of our standards we encourage you to comment on, encourage your investors to get engaged with it. We need to hear from a balanced range of people about the things that we're doing. Finally, I've got a couple personal goals as a board member. Our approach to inspections is very much focused on telling auditors what they're doing wrong. And I personally have a belief that talking about the characteristics of the auditors, the audit teams that get it right, is really important too, because I think that's everybody can learn from that when somebody gets it right. And so that's something that we're going to be working on in the future. Encouraging the audit firms to talk to their people about the needs of investors. It's one of the things for me as a professional. Over the many years as an auditor, I didn't really appreciate until fairly late in my career the importance of the needs of investors in guiding the action of auditors. And I've had direct discussions with the leaders of the firms and asked them to keep in mind the message that gets down to their lowest level people and as they come up through the ranks about the need to consider the views of investors in everything that they do.